Joining me now to break down what we have seen in the market scene today is Faheema Adia from Momentum Securities. Thank you so much for your time, Faheema. Let's actually start off with China and the US. China finally ready to come to the negotiating table with the US after a long time of denying that it was in talks. So how much optimism is the market pricing in there?
Afternoon, Zanati. Thanks for having me. Yes, in short, I think a lot of optimism is coming from this development where China looks like it's finally ready to make a deal with the US or to be more open to negotiating than what they seem to initially indicate. So yes, I think they're going to be taking a bit of a softer stance. And if these two powerhouses can come to some kind of an agreement, it's going to be very good for markets. We already saw, Asian, European markets open higher. And it's also having an impact on our JSE that's up record levels today, above 92,000 points.
Well, let's talk about the US. And of course, we have had quite a number of economic prints. We had US GDP coming out earlier this week, contracting in the first quarter, but also a number of prints on the labor market. And today we are expecting April's jobs report. What do you expect that to look like?
They are expecting that it should come in a bit weaker than the previous forecasts. And that's obviously due to, the impact that these tariffs are having on the US economy in terms of potentially increasing inflation, also reducing economic growth. We did see that GDP print come out, and it looks like it was quite weak. So it is quite concerning at the moment that if these tariffs are not immediately reversed or significantly reduced, it's going to take a major toll on the US economy. I mean, we potentially even see it moving into a recession in the next few months. So it's going to be quite a critical period for now to see how things play out.
Yeah. Well, another thing that investors have also been paying attention to is earnings there in the US. And actually, we had a substantial number of the Magnificent Seven results coming through this week. To understand that it was kind of a mixed picture over there. What stood out for you?
Yes, so if we look at the earnings at face value, I mean, we had some of those big tech companies report that included Microsoft, Amazon, Apple. So it looked like they beat consensus expectations. But the issue comes in when you look at their forecast for the next quarter, which seems to be a bit lighter than expected. And that, of course, is because of the impact that these tariffs are taking on these companies.
Indeed, yeah, it's going to be quite interesting to see how that plays out. We also did have Eurozone inflation coming through today, remaining unchanged in April at 2.2%. It did miss expectations of a slight cooling down, though. I'm just wondering what options this presents for the European Central Bank that actually has implemented a number of interest rate cuts this year.
Yeah, so it did slightly miss the expectation, but it does seem to still be going in the right direction. It is coming off. And in actual fact, they're expecting that the inflation could fall maybe quicker than initially anticipated because these tariffs will likely slow growth, in the Eurozone and globally. So there is one case whereby we could see inflation fall quicker than expected, and that means we could see further rate cuts coming up.
All right. Well, let's bring it back home and take a look at some of the company news that came out. Not a lot, but seeing that there's a lot of activity happening in the gold sector. Gold Fields coming out with a statement that it is in active discussions with Gold Road Resources on its proposed acquisition of the company. What do you make of Gold Fields' efforts here and what it's trying to achieve?
So this is the second discussion it's having with Gold Road Resources in Australia. So it looks like the first bid that they made was rejected. So they're coming back to the table now. They're trying to get 100% ownership of a gold mine in Australia. So they've increased their offering price for that. It's quite a sought after mine, quite a low cost mine. It's got a long lifespan and a significant amount of gold resources there. So it will be quite positive if they can get that over the line. But there's a lot of uncertainties at this stage.
And Anglo Gold Ashanti also coming in with an announcement saying that it's selling its stake in some projects in Cote d'Ivoire, also buying a project from the company. What's interesting is actually that I saw the share plunging almost 5% in morning trade. I'm not sure if it has to do with the announcement or maybe just the broader moves in the gold market. But what did you make of that asset exchange?
Yeah, so it looks like they're selling 2 of their gold projects in the Ivory Coast, and that's just to enable it to focus more on its core operations in the US. So I think it's a good move that it's, allocating more of its funding to its core businesses now. It doesn't want to be overly extended or diversified. So I do think that looks like a positive move. And as for the share price movement, I think you're correct. It's probably the broader movements we're seeing in the gold price that is what's having an impact on the gold miners today.
All right, well, Faheema, before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
Resilient, basically because I've got it in my portfolio. The office sector is still not quite firing on all cylinders, but you are sitting with a historic around about 8% div yield. You've probably on my technical basis, and also just taking a look at price to FFO, probably about a 10% possible capital gain on that. So you're looking at about 15-18% return, which I think is not something to be frowned at in markets as volatile as this. So it's a bit of a safety measure, a bit of annuity income, and a bit of capital gain. I don't think one can ask for a lot more in our current global market.
So, yeah, looking at the results, I mean, really spectacular. I mean, one of the things that we were also talking about the Mag 7 stocks earlier is that, one of the big growth drivers for them is their cloud business as well. And that is actually supply constrained at the moment. They have more customers than they can currently supply services to. They need to build more data centers at this stage. That is a fantastic problem to have. We're not scratching our heads wondering how they're going to get market share. We know that they will have customers coming. Looking at it, obviously they still, significant, probably roughly half their revenue is coming from search advertising, and I think they've been a little bit nervous to cannibalize that by rolling out Gemini and Force.
Yeah.
Obviously the AI app, and they have been losing some ground to OpenAI as people move across and use ChatGPT to answer their questions rather than going and using the old Google search bar. But they have the ability, and I think they need to put that Gemini module front and center already. When you get a search, you kind of Gemini first answers the question, but there's a lot of areas that they need to kind of make that more default app. So I think that is coming. And then of course you've got the moonshots as well, and the moonshots are now being reported on. So you have something like Waymo, which is their self-driving cars. Currently 250,000 rides per week across 4 US cities. This is a silent giant business that is coming, and it is going to change the way that the world moves around.
Well, Faheema, let's start off with Alphabet, as we were talking about the Magnificent Seven. That hasn't come out with numbers yet, but Gary, pretty optimistic about that. Yeah, your take on Alphabet at this point?
Yes, I agree with what he said. I think there are some very attractive prospects that lay ahead for the company. And if you look at the current valuation now, it's of course lost a lot of value this year because of the broader tech sell-off. So it's actually trading quite an attractive forward PE at the moment at just 16.6 times, which I think is pretty good given the growth expectations ahead. And once we see a bit of a bounce back in that NASDAQ, we should see further recovery in Alphabet.
Well, let's go into property, resilient properties, one that actually not a lot of people talk about in that REIT space. Is this one on your radar?
So I would say right now, just given that if you look at its current dividend yield, it's at about 7.3%. So I do think it's a bit low, considering that the SA Gavi bond yield is much higher than that. So that is something we need to take into account when looking at REITs. So there are other REITs that I think offer a higher dividend yield at the moment. Growth Point, for example, would be one of those.
All right. Well, what are you hanging your hat on today?
So I'm looking at NVIDIA. So like Alphabet, it's also lost a lot of value just due to that broader tech sell-off. And due to that, I think it's now looking quite attractive from a valuation perspective, now trading at a forward PE of just 24 times and a price earnings growth ratio of 0.6 times. And that's quite cheap considering the long-term growth expectations of about 40%. And then it also looks like the US may be softening its stance on the chip bans to countries and regions like the UAE. The CEO of NVIDIA also recently raised concerns about the chip bans to China, saying that the competitor Huawei would just be able to gain more market share in that case. So perhaps there will be some room to reverse some of those bans in the Chinese region as well. But I do think that it's looking attractive at the moment, and that's my stock pick.
All right. Well, thank you so much for your time on this short week, Faheema. Really, really appreciate your insights. That was Faheema Adia from Momentum Securities.